market structure. A lot of interesting things are occurring, especially with what had happened last week in reference to pending data, and this week, today, mainly, and tomorrow, that came out as well, and talking about how structure is failing to break certain key areas. And so really excited to go into that. But first and foremost, once again, thank you so much to every single person that did come out. If you guys don't know how I run these and construct these webinars, basically what I do is I go through $7 or $6 index pairs that I have here, plus the dollar index, making 7 pairs in total from a longer time frame perspective, as well as going into the smaller time frames and looking at how we could execute such trades. And then from there, guys, I will do any questions or answers that you guys may have. And so if you guys do have any questions, please ask them in the chat room. I will get to them at the end, or simply hold them or write them down somewhere else. And so with that, guys, let's get right into it. So like I said, guys, we're at a very interesting and critical point right now in a lot of the pairs, simply for the fact that last week, if we look at what had happened, we had a lot of economic data that came out, especially with the U.S. speaking, right, as well as this week with all the main speakers coming out to speak tomorrow as well, chairmans and things of that nature coming out. And so we look at last week and what was going on, and we can see here that we had the federal fund rates that was going to be released, in which they were going to increase by a quarter basis point, right? And well as we had the FOMC, in which they were going to be giving us indications of overall health of the economy, when we're going to get next rate hike, how many, and things of that nature. Now, one thing to factor in, guys, is that what we were stating was that the interest rate had no effect on what was going to happen in reference to dollar pushes, but rather it was all going to be about the press conference, for that matter, simply for the fact that this was already priced in that they were going to raise by a quarter basis point. It was a matter of where's the next step and where are we going to head towards, right? And so quite interesting, right? And nothing drastically happened that day. We take a look at it when that movement occurred, and this was this? What was this? This was 1407. I could see it, actually, I'll see it better on the euro. My bad, guys. I'm going to pull it on the euro. So this is when FOMC came out, right? And then this is all Draghi that pushed that to the downside. So two interesting events. Nothing really happened in reference to dollar. And then from there, Draghi came out and spoke, causing a massive increase in dollar. Now, one thing to factor in, guys, is that after all that was done, we take a look at this week and what was going on, and we can see here that once again, we had Draghi spoke today, in which we saw no further movement on the pairs, rather just some sort of consolidation. And then tomorrow is a very, very big day for numerous reasons. We got a lot of the big speakers coming out, giving us indications of overall health and potential movements in reference to policies of their economies. And so going into the markets and where we're headed, we're going to look at the dollar index, guys, from a longer time frame perspective, and to start off and really give us indications of, okay, where are we going to be moving, and more importantly, what type of environment are we in from a risk exposed perspective. And one thing that you guys have to understand straight off the bat, to the guys that are part of the group chat and signals, and as well as to the training courses and stuff like that, is that in weeks like this is mainly a intraday slash scalper scalper's game, simply for the fact that it's very tough for us swingers to take trades, simply for the fact that there's so much pending data coming out that the markets are too volatile for us to secure an entry quick enough and potentially push that trade to break even to reduce the risk associated to us. And so in instances like this, not odd if we don't take trades, whether we do take one or we don't take any at all. So to the people that are wondering why I haven't been pumping as many signals out from last week and even the start of this week, is simply for that reason. Too much pending data coming out, and I did not feel that it was necessary to put you guys in risk exposed environments. And so in instances like this, sometimes it's better just to sit on our hands and watch, right, and learn something about the markets, potentially where structure can move. And so looking at it from a monthly time frame, just to start off, guys, no signs of deceleration right now from this current bullish momentum that we are in. Once again, this was a key indication whether we were going to really start cracking to the downside or potentially creating some type of liquidation or relief after this initial impulse, simply for the fact that if we do take a look in the past, we can see that this was a quite strong area from the seller's perspective. And then once we did break above, it does become support or an area in which a lot of bullish orders are going to be sitting. And so as of right now, guys, we are still stating that this is treated as relief or liquidation until we do in fact clear that 94.15 handle once the month closes. If we fail to crack that 94.15 handle, this is all warranted as relief, and we're still looking to run this back to the downside. One thing, if you guys don't understand about just the natures of impulses and reliefs, or the way structures move, or how they affect economies, price can't simply move in one straight direction for forever, simply for the fact that it's not healthy for an economy, right? Those are too drastic of changes and fluctuations within the exchange rates, and so you do need some type of liquidation or profit taking or relief off of such a movement. And so looking at it as of right now, we are in a critical area. We can see here that in the past, from about mid 2014 into about now, we can see that there was a lot of pending orders from the bulls sitting here. And then now, once the bears broke through, we are going to state that now there should be a lot of bearish orders sitting there. And so that's why we are stating any bullish movements to the upside on the dollar are treated as short-term and moderate to higher risk, simply for the fact that we are still expecting continuation of that momentum, unless we do in fact crack this 94.15, 95 region. Now, looking at it from a weekly time frame, guys, this was a small term relief or flag continuation pattern, whatever you want to call it. And then from there, we did make one more leg up to around 95. Now, looking at it, a couple ways that we could potentially leg about. We're either going to start to really decelerate off of this. This will create some type of reversal pattern, and we should start to drop back to that 93 handle. And then from there, it's either going to be treated as relief, or we should start to continue all the way down to the 89 handle. But as of right now, there isn't much to really give us to tell us where we should really move. All we can say is that, structure is somewhat decelerating near that 95 handle. Now, looking at it from the daily perspective, we can look at a couple ways that this did form out. We did see a massive rally followed by a short-term liquidation or relief phase. And so this is a key area for us, because this is the first area that created a higher low within the trend. We're definitely, warranted that continuation of the bullish momentum. And so when we rallied again, FOMC attempted to break the 93.30 handle, where we've seen a lot of bullish orders be sitting from a weekly time frame. Failed to do that, right? And so that induced a lot of buying pressure. And so now, where are we going to be moving next? In my opinion, if we fail to break this, you're expecting some type of pullback, and depending on how big this pullback comes about, will warrant whether you're going to be really shifting all the way back down, or you potentially could rally back above. Now, looking at as of right now, if this still continues to move higher, at some point you're going to expect this to come crashing down again, because that would warrant a reversal pattern rather than a continuation pattern, simply for the fact that a trend requires 4 movements. That would be a duration of 2 movements and not 4, and so that would not warrant trend continuation, but rather trend reversal. And so looking at it as of right now, apologies that I didn't get rid of these trends, so I will real quick. These are not valid anymore, or not needed. And so looking at it from a smaller time frame perspective, and how we could see this play out in the next 24 to 72 hours, especially with the news that's coming out tomorrow, which means, guys, to all the people that are part of my signals in group chat, no signals will be sent until this is all done. So most likely when Asian/London starts rolling in, we'll be looking for potential trade setup. Apologies, guys, my bad. It just came on mute, and I was trying to unmute myself, but I can't unmute myself from my phone, because my phone's my mic, because my desktop doesn't have a mic. Should have a mic, but I don't. But anyways, guys, going back into it. So looking at dollar right now on the 4-hour time frame. First, let's break it down from what happened last week. We saw, from a couple weeks ago, we saw an impulse, and then from there we saw this slow decelerated descending channel, right? FOMC, which occurred right within here, attempted to break that 93.30 handle. We failed to do so, hence warranting all of this as profit taking or liquidation for continuation up, structural retest, etc., etc. Now, one thing to look at is that when we did rally here, for structure to tell us that, you know what, we most likely will break that high, we had to leg back and make a deeper pullback or a continuation pattern to start rallying up. We didn't do that. Instead, we made an impulse, and from there, we continued to range up or start creating short-term higher highs and higher lows. What it tells us is that, you know, this entire environment is now a much higher risk exposed environment, one, and two, at some point we are expecting this to drop, simply for the fact that continuation within a trend has to have 4 movements. This is only 2 right now, and so looking at it, we are going to warrant this as range bound, and any bullish movements on the dollar is going to have to first be a crack above that 95 handle, a short-term continuation pattern, and you could look to run that up to the 96, 97 region. Now, failure to do that, you're going to want to see a strong break back below your 94.15 handle to invalidate this initial breakout, stating that that monthly resistance is still holding. From there, you're going to want to see some type of continuation pattern, and then you can start running it all the way back down to the 93.30, potentially even lower to the 93 handle, where that initial potential breakout from last week on the FOMC occurred. Now, failure to do either, guys, is just going to warrant consolidation or range bound, and that's not something that you should be interested in. But be wary, because some movements, guys, on the other dollar pairs, they're going to look like they're sound movements, but you're looking at the dollar index itself, and there's nothing going on. There's no, you know, reason to take a trade right now, because there's too many potential scenarios that can come about, you know, because you look at it, yes, this is an impulse, this is suggesting reversal, at some point we should rally, but you know what, within it you can see a smaller term impulse, a smaller term relief. This could simply start rallying back up. So in an instance like this, let the market develop a bit more, let it prove to you that market momentum is going to push in the direction that you want, and then from there, you know, assess based on that, right? Don't try to predict what's going to go on. Let it come to you, and then from there base your trades off of that. And so moving into the next pair, which is euro direct inverse, right, starting from the monthly time frame, going to be looking quite the same. Slow signs of deceleration right now on the monthly compared to the dollar. We can see that we are slowly decelerating off of that 3-year past resistance, newfound support, or an area for a lot of bullish orders. And so looking at it as of right now, guys, we can't state if this is going to warrant the big rally back up, because as of right now, this is quite dominant. And so what we are going to state is that any bullish pushes are going to be warranted as short-term or high, state of liquidation for continuation to the downside, unless we do start to make significant pushes up. But looking at it from the monthly time frame right now, we can see that structure is trying to push off that 116.50 handle, and so we will see if structure does falsely break that area. But as of right now, we are pushing below it, and so going to be quite interesting what price decides to do. On the weekly, you do want to take a look at what's occurred in the past, and price has wicked within this previous region and then started to rally above. So what we are looking for is on the smaller time frame, which I'm going to show you. Structure is showing signs of reversal and or liquidation from the initial impulse, and so at some point we are expecting some type of pullback. The question is when, right? And so someone asked before we even got started on the webinar, do I expect EU to rally back to 119.40? It's a strong chance, right? Because that initial low that got broken, that warranted this entire impulse, is at the 120, 121 handle. 121, 122 handle, but the 119, 120 handle, we could wick there. Now, 119.40 would create the right shoulder of the head and shoulders pattern, but that being the right shoulder, this would be treated as relief for continuation down. That is possibility. I genuinely think, though, that we'll either wick out from here or we'll start to push here, create a lower high, and start to drop. The only way that these trades become invalidated is if and only if we do start to crack back above that 121, 122 handle. Hence, all bullish movements to the upside are treated as short-term, higher risk exposed, and things of that nature. But looking at it as of right now and what's been going on, this is where the fun stuff comes in that I was excited to get in with you guys. So let's go over a couple of things real quick. Looking at it from a daily time frame. There was a tremendous amount of news that came out last week and this week. And so if that's the case, we would expect some serious structural shifts, right? Simply for the fact that there's a lot of money fluctuating within the markets. And so if that's the case, let's take a look at what came out. We had FOMC, rate hikes. We had Draghi, And then this week, we have Draghi today. Then tomorrow, we got a lot of the chairman speaking. Now, let's go over the first two events, FOMC, rate hike, and then Draghi. Pretty strong pieces of data that are coming out. And we want to take a look at these key areas where structure is starting to bounce off of. And we would agree that data, shifts momentum or continues it. And if it fails to do either, that does tell us that at some point, one side, buyers or sellers, are getting tired. So take a look at this. After this big leg down, we relief, right? Which our idea about this, which this was all state of liquidation or profit taking, was correct. We continue down. That was Draghi, that big push. And we failed to break that 115, 116 handle. And so we have FOMC that fails to break to the upside, but failed also to break to the downside with Draghi coming into it. And now we have the big speakers tomorrow. So what I'm getting at here is that if we fail to break this area tomorrow, at some point, we're going to expect that pullback, because that is just too much of crucial data to attempt to break a key area that can't push through. Catalysts create the direction, technicals bring price within that direction. Now that is starting to change slowly as people are proving that hypothetical and psychological value is more important than tangible and tangible assets and things of that nature. And so, which you can thank crypto for, but it's quite interesting, right? And so, looking at it right now from a daily time frame, guys, key areas that you want to look at is that 115 handle. If we don't break it and this starts to slowly decelerate, this will form a reversal pattern. At some point, you are looking for that rally back to the 118 handle. One thing to factor is that you are range bound due to that initial impulse to the downside, warranting all of this is a state of liquidation or profit taking. So until we create higher highs or lower lows, you are sitting within the range, and those are the parameters you are trading within. Looking at it for the next 24 to 72 hours, guys, let's take a look at a couple of things real quick. I'm going to keep that trend there, and let's look at it. This was the initial impulse to the downside, made a short-term state of liquidation or relief, and then dropped once more. Now, one thing to factor in is that even though we did drop back to the lows, we failed to break the lows, establishing that we are definitely in a range as of right now. And so if you do start to see this breakout, you could start to target the lows again and potentially all the way down to the weekly support. Now, if this does start to rally back up, you could look for a deeper sell. And then from there, take profit one would be at the lows again, and take profit two would be at the weekly support. Now, one thing to factor in is this is the last lower high of this descending channel. And so if that does in fact break, you are going to look for short-term buys to the weekly resistance. Now, one thing to factor in is that this will be treated as relief or profit taking for still continuation back down to that previous low, potentially all the way back down to the weekly support, creating a structural retest from the previous breakout of that one support, now newfound resistance. Now, with that, any bullish pushes to the upside are going to be treated as short-term and higher risk. Any bearish pushes to the downside are going to be treated as lower to moderate risk and longer term, because you are riding with market's initial momentum. Now, factor in again that this is your key area that you are dealing with. And so if you are trying to take continuation trades within here and you're not breaking below, don't be surprised. Why? We just went over it in the past that there's very critical areas there. Apologies, that's a really terrible arrow. But there's a lot of bullish orders sitting there, right? And structure is failing to break, especially with a lot of economic data coming out. And so if this does break out, guys, does form this reversal pattern, at some point you are looking to buy that back up. That will still be warranted as short term. The only way that this whole bearish momentum becomes invalidated is if and only if we do crack above that 118.54. You want to see a very, very strong impulse to the upside, stating that, you know what, this is no longer in play. That is gone, right? Once that happens, then you know what, let it relief, let it liquidate, and start rallying that back to the upside. Still, that would all be treated as relief or liquidation. So if we went over that example real quick, if that impulsed and pulled back and this still rallied back up, this would all still be treated as just a very deep state of correction or relief, simply for the fact that, you know what, if you look left from the previous structure that we broke out from, that would simply just be a structural retest of the low that we broke, right? And so we could simply rally off of that back to the downside. So that is very possible as well. right? But as of right now, guys, those are your two plays on Euro US dollar. USD CAD, very, very, very interesting what's going on right now, right? A lot of us were bearish, or maybe I was the only one that was bearish on such a trade, but all good, right? Because that's why we trade what we see, not what we think. And so the only reason, guys, why I was bearish on this pair, simply for the fact that if you do take a look at CAD economics from the weekly time frame, and then we'll go back to the monthly, you can see that it does start with a very strong impulse, followed by a nice long state of liquidation or relief. And then from there, we do see a continuation of that initial impulse. Now, we were in that same state of relief and liquidation. And if you look left, that is the previous area where there were a lot of bullish pending orders, right? So once we broke through that, now we should start to see a lot of bearish pending orders, in which we did. We saw the first one occur back in the end of April. Now we're seeing structure push within that region again. And so the question becomes, is this breakout validated? Some would say yes, some would say no. I say it's too tough to tell right now. Because yes, we are in an impulse, but with every impulse comes profit-taking, liquidation, or relief. And so if that's the case, we are going to expect a pullback. Now, how that pullback formulates will depend whether we're going to really start rallying up, or you know what, if this was a false break and we should continue all the way down and potentially to break the lows. And so looking at it, guys, from the monthly time frame perspective, we are cracking above a very critical area as of right now. Now, you can see here that this is the main region. Once we broke this previous resistance, this became newfound support. This was a false break, hence this is the previous support area, past resistance, etc. Very strong area where price showed a lot of bullish and bearish orders. If we start to pull off that, I would not be surprised why. And so looking at that, you can see how long that 133 handle held for, that 130 handle held for. And so we are breaking above it right now. If we do still continue to hold, then you know what? We want to start looking for some buys, and we want to start looking for some type of pullback, and then we can start rallying that back up. But as of right now, this is too extended for us to be looking at. And so looking at it from a daily time frame, it's extended. That's as simply as what we can say about that. We were stating that, you know what, this was all treated as profit taking or relief for another downside movement, at least to the weekly ascending trend. But we failed to break out of the short-term ascending. And so we did continue up. We didn't want to take any buys, simply for the fact that we did have monthly resistance. A lot of bearish pending orders are sitting there, as well as this is a weekly descending trend line. So there's a lot of bearish confluences telling us this is not something that we want to be trading. Now, since it did break out and make a clear break above, we are expecting some type of liquidation. This is very impulsive. If you're going to take trades on CAD, shout out to you, because you are a better person than me. I am not looking to take that. But looking at it from a 4-hour time frame perspective, we called this in the setups that we were stating last night, that after this impulse, this was a reversal pattern, but we would not be surprised if we would tag the daily or weekly and then start to drop. And so we are expecting that drop on CAD. It's not stating that CAD should be a reversal, but this is very, very impulsive. Someone has to take profits from that. It's a given. And once they do take profits from that, then we can dictate if this is here to stay or not. And so this is going to be the key area for CAD right now to state whether or not that bullish momentum should continue. But at some point, we are looking for this to start to cease to exist. So two ways this could play out. Either A, this is going to start rallying up to the 133.46, and then from there start breaking back down. Then from there, that could be turned from reversal pattern into continuation pattern, and then we could expect a rally back to the 133.46 and potentially breaking it all the way back to the monthly. Now, if that doesn't happen, we are expecting structure to start to decelerate near here, start to make a strong break, some type of pullback, and then from there we could expect a rally down to the ascending trend line. Once again, that would be treated as relief or liquidation, and then from there you could expect a rally back to the upside. Or if that does break back below the monthly resistance, stating that this break was invalidated, then from there you'll look for another continuation pattern, and then you can look for a whole rally back to the weekly ascending trend. Now, if we fail to do either, guys, we are just going to sit range bound between the 133 and the 131 handle. There is going to be one initial trade to be taken in here whenever this breaks out, but that's about it. If this does break out, that is a very, very short-term buy. You're going to have a lot of bearish pending orders sitting there. And on top of that, this is already so extended. So from a roller coaster perspective, your risk exposure would be quite high. So that's not something that you should be interested in. Overall, CAD is not something that I'm interested in, only because of the behavior that it's in. Now, looking at UJ right now, critical, but we are decelerating. Two things that are going on. There's an impulse within an impulse, right? You have this large impulse that occurred, and this whole structure is treated as relief, profit taking a state of liquidation. This is the entire movement, okay? So at some point, we are expecting that to occur. We are expecting the drop first, and then we're expecting the rally. Why are we expecting the drop? When this impulse occurred, this was the base that formed, hence that was the state of liquidation it was in. It failed to break out to cause a rally back to the 124, 126 handle, simply because once we broke the low, this became invalid, and therefore all of this bullish momentum is treated as liquidation or a state of relief. And so with that, we are still expecting continuation back to the 100 handle unless we do break back above, the 112, 113 handle, and then from there we could say, you know what, let's go to the 120s and potentially higher. But as of right now, looking at it from the weekly time frame perspective, not the 2-minute, the weekly time frame perspective, we can see a lot of deceleration occurring at that 110.50 handle. And so looking at it, guys, this is exactly what's taught in the course from a candlestick analysis perspective. You guys are looking for some type of deceleration to occur near a strong area where there could be a lot of bullish or bearish pending orders, in this case bearish. And so looking at it, guys, any bullish trades on UJ are going to be treated as short-term or higher risk, simply for the fact that you do want to take into account that initial impulse that did occur, which warranted this short-term ascending movement. And so looking at the key critical areas that's going to cause this continuation of this bearish momentum is going to be a break and close below in the weekly at the 108 handle, and then you're golden to start to run it back down to the 104 and potentially even lower to the 101, 100 handle. Now, looking from a daily time frame, and if you guys could just give me 1 second, I'm going to take a sip of water. All right, guys, so looking at it from a daily time frame, we are breaking out as of right now. And so we are looking for sells on UJ. We're looking to run it back down to the 108.64 handle, right? This is the impulse. This I'll treat as relief, rejecting the trend, double top, all that good stuff. False break of the monthly resistance, even better. Lots of confluences coming into play. I have to reduce annotations, my bad. Okay. So looking at it from the 4-hour time frame, we're looking quite good as of right now, guys. And so this is looking for a really good sell setup. One thing we do want to take into consideration is that there was going to be a lot of pending orders sitting here once we broke through. This was really nice for us to see. And so now this is setting up as a nice state of liquidation or relief, and we should see continuation all the way down to the weekly support at the 108.64 handle. Now that's really ideally all you want to run it to, because you can see that's where the start of this bullish momentum did occur. Hence, this could be treated as relief for a potential rally back to the upside. That is a possibility, but we continue to break below that, you keep rallying that all the way down. Now, looking at UJ, we could expect price to push back to here around the 110.40, creating a structural retest on that previous low, creating a lower high as well. And then from there, we could expect the breakout. Our goal is once we start to see a short-term lower low occur on the 1-hour time frame, then we're golden to take that to the down, stops be above the previous highs, and we will give it a shot. Now, the only way this does become a buy is if and only if we make a strong enough impulse to the upside, very, very strong, followed by a short-term pullback, and then from there, you can look for a rally back up. Only because the monthly sitting right there, you can see in the past that we had a lot of pending orders sitting there, and if I zoom out even more, you can see that that's where the previous low occurred. Hence, this is warranted as a structural retest. And so we should actually continue to break the lows in theory. Now, failure to do either, guys, could just warrant range within this if this just starts to break out, and that is a possibility. But news most likely is going to push this in one direction or the other tomorrow, and so I wouldn't be surprised if this just tanks all the way down. That's very possible, right? But if we do start to falsely break back in here, I would not be looking to take the trades, because then this would be a false break, and that's going to be consolidation. Not interested. Next pair. GBP USD on the monthly hasn't done much, right? We expect that. It's been selling off a lot, and then we expect some type of deceleration. So Looking at GU just to start, economically speaking, we start with a really strong impulse from there, a state of liquidation or relief. That's another strong impulse, and then we were at a nice state of liquidation or relief. You saw small-term impulse relief or states of liquidation within that big descending push or impulsive bearish push. So, looking at it from a monthly time frame, we did in fact break the low that was holding for 3 months. Now, we've never come back and pulled back to that area, which at some point we are expecting price to do, right? This is only an impulse right now. It's a two-shot movement. This is your high, it's your low. There's no trend that's formed yet. A trend has to have 4 movements. That's your high, that's your low. That creates your lower high, and that creates your lower low. That's your trend, right? This is not forming a trend yet. So at some point, we're expecting liquidation or relief to occur, especially on pound. And so looking at it from a weekly time frame perspective, we are in an area where there could be a lot of potential buying orders. And the reason being is because you can see that was previous resistance. Once we broke above there, this identified an area as a newfound dynamic area of support. We could expect some type of deceleration or exhaustion to occur, warranting that as the reversal pattern after the initial impulse. And then from there, we could expect a rally back to the 137.56 handle. Now, if that does happen, this is all going to be treated as relief anyway, and we are still going to expect continuation down unless we do break back above, stating that this is now invalid. Now, one thing to factor in is that even though we did break out of this ascending trend, a trend is not a straight line direction, but rather a consistency of highs and lows. And so this is the last low that needs to break to see another continuation play to the downside to the 127.68 handle. And so if we don't do that, guys, we are going to expect some type of deceleration or exhaustion and some type of pullback back to the 137.56. Pulling it to the daily time frame right now, you could see a very clear state of reversal that we are in after that initial impulse occurred right here. This is all reversal. And so at some point, we are going to expect this to start to slow down and start to pull back. You know there's someone that's still holding their trade from the top here. And so people have to liquidate after an initial push or drop. It's just a must. And on top of that, guys, if you understand anything from an economic standpoint on how currencies move, it is not healthy for prices to be pushing in a certain direction for excess of time, simply for the fact that from an exchange rate perspective, import and export, things of that nature, it's not very healthy and it's not good from an economic perspective. And so looking at it from a 4-hour time frame, guys, right now, price did push and continue to the downside. The one thing, guys, that was annoying, these past 2 weeks, and on a side note real quick, was the fact that all the setups that we sent, right, besides, yes, all the setups that we do on the webinar here, they go through, you have to, one thing, take it from me, you got to bite your tongue over the years as a professional trader when things like this happen, because, like last week, we called every single setup to a T. This week, we sent all the setups last night, every single setup played out to a T. But the unfortunate thing, and why I'm saying you got to kind of bite your tongue, is simply for the fact that we can't pull those trades. Those are too high risk of exposed environments. This is where I stated that we should have gotten the entry last night, right? But I can't pull that because there's too much news coming out. And so, that's not something that I'm interested in. And so in weeks like this, I'll take my punches in the way that I do. I'm about longevity, right? Not about trying to make all my money in one shot. And so, that's how you have to look at it from a professional perspective. This is not a game where you're looking to make $1 million in one day, but rather you're looking to make 100 million over the course of 30 years, right? Because, at some point you're going to burn out. I'm telling you, I know a lot of guys and girls who went into the game, made big bucks, and have burnt out over the years because, it's tough to keep and then continue that lifestyle with, just so much impulsive, actions. And so looking at it, guys, it's rather better to look at it from an educational standpoint and say, okay, how can I be better? How can I understand the market better? And so looking at pound as of right now, like I said, we broke out of what we expected to occur, but the entirety of this environment needs to correct to the upside. Why? Let's take a look real quick. Look at what happened. We broke this low, right? Okay. That's what started this rally. Then we moved from reversal to consolidation. Then we dropped. Then we reliefed, continuation. But now we've created a range. Fine. Within that, we can see a state But then, can you guys give me 2 seconds? Just 2 seconds. Sorry, 1 second. Sorry about that, guys. Okay, so looking at GU as of right now, even though we did have a state of reversal within here, right? One thing that you want to do factor in is that structure is still continuing to push. So the reversal now, does it change? Yes, simply for the fact that, you know what, we are breaking, whoops, that is not the object that I wanted. We are breaking these lows right here. And so now what we are expecting is structure to come back, create some type of relief or pullback. And then from there, we are expecting another drop back to the lows. This would be warranted as a structural retest. The only way that this would be warranted as a false break is if we do break a back above, stating that this reversal is still inbound. And then from there, we are going to expect the rally back to the 133.50 handle. Now, if this does occur, this is still going to be treated as relief or liquidation, right? Because all of the momentum is still bearish. There's your impulse. This is the range of consolidation we were in. This was the relief or profit taking. Then from there, we saw continuation, went to a state of reversal, but then continued down. So now we are expecting relief for another drop down. Now, one thing to factor in is that this could pull back, drop, and then start to decelerate here. And that could just be another reversal pattern within the impulse, right? Because of the previous weekly support. Hence, bullish orders are going to be sitting within that area. Now, the only way that the entirety bearish momentum becomes invalidated is if we see a really strong crack above. We have to see a very, very strong break. We want to see to state that, you know what, all of this is now over. This is your first area to crack. This is your next area to crack. Either way, you're looking for continuation here, looking to rally that, or you're looking for continuation there, and you're looking to rally that back up. Regardless, failure to do either, guys, any bullish movements to the upside are going to be treated as short-term or higher risk. Bearish movements to the downside, lower risk, longer term. But factor in this. This is still too extended, right? Pound has moved, guys. Let's look at this real quick. 12 cents. Almost 12.5 cents in about 24 days. That is not economically healthy, right? That is not healthy for an economy. It's just not. At some point, liquidation, profit taking needs to occur, whether the banks start inducing cash, they start pumping it in, or whether, you know, we see some type of serious, you know, economic shifts. We can see that we are at a very critical area. I'm not stating that a reversal needs to occur right away, but just keep that in mind that, you know what, any last pushes that you get, that's about it. Then from there, you're expecting some type of exhaustion, relief, or pullback. Same thing with AU, right? On the monthly time frame, yes, we're breaking out. And so even though we are breaking out, it all depends on how this month closes. On something like AU, we are in a bit of a different scenario. We haven't dropped as significant as compared to pound, right? And so we are seeing continuation of that initial impulse that was made at the start in the mid of 2014, which all of this was treated as relief. And so now we are seeing continuation of that. Last month, we failed to break the low. And so we were stating that we could potentially expect some type of pullback and then a drop back to the lows. But as of right now, we are seeing price start to push below the monthly support. But take a look at this. This is where we've seen a lot of previous pending orders being seen after we broke that low there. And so we wouldn't be surprised if structure starts to pull off or relief, potentially pull back, and then drop. We are expecting that low to break only because AU is structured for depreciation against the dollar. But as of right now, structure is showing still bearish signs to the downside. So looking at it from a weekly time frame perspective, at first, guys, we want to state that this was not the reason why AUD/USD started to tank, simply for the fact that a trend is not a straight line shot, but a consistence of highs and lows. We never broke the low on the ascending structure, and so that didn't warrant the bearish momentum just yet. But what it did hint to us is that we were going to move in a state of liquidation or relief, which was nice. It gives us good ideas, and now we can see why structure is continuing. Now, looking at it, how much more does AU have to go? Maybe another 100 pips max. You want to be looking at previous areas and seeing, okay, where did pending orders sit? And we can see between 72 to 74 pending orders were sitting from the bullish and bearish perspective. And so looking at AU as of right now, and the one thing, guys, you have to understand is that I'm going over the structure from a longer time frame perspective. From the shorter time frame, you're still moving with how the trend is playing out. And you're just keeping in mind all of these things, the type of risk exposed environments you're in, and things of that nature. Now, looking at AU from the daily perspective, breaking critical areas, right? In times like these, you either make some serious pips or you get beat up due to the stop hunts and things of that nature. We're cracking through. We can see why. This was all relief after the initial impulse. This was a reversal pattern, which did warrant at some point we would need to see some type of state of liquidation. Now we're seeing continuation of that 1, 2, 3 pattern, breaking the lows. Hence, this is now becoming the one. What does that mean? At some point, we are expecting some type of pullback, and then we could expect another drop down to the monthly support. Looking at it as of right now, this does need to relief. It's not stating now it has to relief, but at some point it does. If you look left, guys, we are going to approach a very critical area here. You can see that there were a lot of pending orders from the bullish and bearish perspective. And so we are going to expect AU to do the same. Now, that's not to say that AU can't just continue its bearish momentum, but at some point we are going to expect structure to start to liquidate or pull off. And so looking at it, structure did exactly as we had anticipated. It broke the previous low, came back, retested, and things of that nature. And now we are looking for continuation down. Look left, we did in fact create lower lows by breaking that low. Let's break it off, right? This was all treated as relief at first after the initial impulse. Once we broke down, this invalidated that initial breakout, and now this is the initial impulse we work with, right? This was treated as a reversal pattern. Hence, this is a just deeper push or deeper bearish correction. And so one thing you want to factor in is that this is going to be warranted as a much higher risk exposed trade, only for the sole factor that this is very, very extended. Yes, if this flags out and breaks out, you could expect one more rally to the weekly support, but that's about it. If this continues to push down, at some point you are going to expect a rally back up. And still, that rally back up is short term. It's not warranted as a shift within momentum. Don't just think any trend break warrants a shift, right? You have to factor in the entirety of the structure and state, are we really changing direction? Or is structure simply liquidating, right? People thought when we broke out of that trend there, oh, we are in a long-term buy, but not really. The whole structure was just a state of relief. It's not to say that you can't take these short-term buys, but you just then just have every bullish push you're taking short-term, moderate to higher risk, because you're still expecting a bigger push to the downside, right? But now looking at it from just a quick mirror stance, once this breaks out, creates lower lows, that is the first trade to the downside. Fades to either, guys, you want to see a strong break back above the weekly support, look for some type of pullback, and then you could expect a rally here. Now, if that does occur, this is still treated as relief, and you could expect another leg back to the downside, unless we break back above the 75, 75, 50 handle. Look for some type of continuation and try to rally. Actually, guys, in an instance like this, you want to break above the monthly and the descending trend. And you guys would say, well, Albert, that's a lot of pips. There's only a 100 pip break. That's not really that much. So just look for a very strong break above the monthly, above the descending trend, start to invalidate bearish momentum, right? Failure to either, guys, you could just be sitting within this range. That might not be something that you guys are interested in. Last but not least, New Zealand dollar from the monthly time frame. See, on New Zealand, we're not really doing much, and so that gives skepticism on some of the other pairs that are more driven by the commodities. We're not breaking the lows yet, even though we broke out of the ascending trend. As I always say, a trend is not a straight line shot, but rather a consistency of highs and lows. That low never broke. Doesn't warrant a continuation to the downside. Yes, that is the initial impulse. Yes, this was treated as profit taking, and sure, we should continue down at some point, unless that fails to break and this starts to create a more complex structure to potentially rally back up and potentially even rally all the way back up. But that's going to take some time to develop. And so until we break that 68.85 handle, expect your structure to be sitting within the range that it's currently within. The range that we see right here is starting. Sorry, that's just a quick drawing, but we can see here that's ideally the highs and the lows. But looking at it, you are bearish as of right now because of the initial impulse that was made. This is all treated as relief, so you could expect one more rally to the monthly support or the low of the current range that we are in. You can see a lot of bullish orders were sitting there, so you could expect the same to occur around this area. Now, looking at it from a daily time frame perspective, we are within a short-term range, within a bigger term range, right? And so how did we get to this range? We did in fact break this low, invalidating this initial bullish push, with that being the direction that we are going with. Now, this did in fact create a range, and from there, we are seeing price attempt to test the lows of that range. Now, within that, guys, this has been a tough structure to trade because a lot of people were stating that, you know, we could expect a crack above that 70.41 handle, but we did see a lot of deceleration occur, and this was forming a reversal pattern after that initial impulse, and so we understand why this occurred, but now this is forming a reversal near that 68.85 handle. And so New Zealand pairs are not something that you guys should be interested in trading right now. There's no really long-term direction to be taken. Not on many pairs there's long-term directions to be taken, but especially in New Zealand, this has kind of already made its move. And so if you haven't caught it anywhere within here or even within here, right, it's kind of done. And so looking at it, this was the reversal that we were in after the initial impulse. Hence that invalidates once we made that impulse. Once we made this initial push to the downside, this was reversal, not continuation, but that doesn't state that the trend changes. Just giving you ideas from a risk perspective on how you should be approaching the trade. Now, we did see continuation of the bearish momentum. We are in a state of relief. Once this breaks out, you could expect a rally back to the first the lows of the consolidation, and then that low all the way down to the monthly support that we were talking about on the longer time frames, because we are in a range. Now, the only way this bearish momentum becomes invalid is if and only if we make a strong crack above, followed by a short-term continuation pattern, and then from there you could expect a rally back to the tops of the range. Now, no long-term bullish bias is warranted until you do see a strong enough crack above the 70.50 handle, and then you want to see some type of deep pullback or continuation, and then start rallying that back up. Let a trend form and things like that. Now, take into consideration again, if that occurs, that's still short term. That is the low that broke, and this would be warranted as a structural retest for continuation back to the downside, which could happen. The only way this definitely becomes invalid is if and only if we break above, stating that never existed. Failure to do either, guys, is just going to warrant within this range. Yes, there are pips to be made, but there's no long-term trades to be taken, and you will simply just sit within this range of consolidation. And so with that, guys, those are the 7 pairs that I want to review in reference to the dollar pairs from a longer time frame perspective, as well as how we could assess them from an entry and exit perspective. What I'm going to be doing real quick now is I'm going to take a quick sip of water, and then from there we're going to go through the pairs one last time from a top-down analysis, just from an entries and exits perspective on how we could potentially look to take these trades in the next 24 to 72 hours with the pending data that is coming out. And then from there, I will answer any questions that you guys may have. So I'll explain one more time, guys, what I'm going to be doing. I'm going to be going through the next $6 pairs for you guys for the next 24 to 72 hours to give you guys indications of where we could expect price to move with the pending data that is going to be coming out tomorrow with all the major chairmen and chairwomen that are going to be speaking, as well as potentially where we could expect price to move by the end of the week. And so with that, I hope you guys enjoy this, and let's get right into it. So looking at it as of right now, just like we were stating before, structure is in fact rejecting that 115, 116 handle, and we are seeing some type of bullish orders being seen there. Now, one thing to factor in, guys, is that the bearish momentum is still in power, in which any bullish pushes to the upside are going to be treated as short-term or moderate to higher risk, and we're going to be stating that those bullish pushes will be in a state of liquidation or relief for continuation down of this bearish momentum, as that's what we are stating right here. Now, one thing to factor in, guys, is this is a very critical area. This is where the previous 3-year resistance was. Once we did break that, it's obvious on why we are seeing bullish orders sitting here as of right now. Now, one thing to factor is that even though we are stating that bullish orders are going to be sitting here, so any pullbacks to the upside will be treated as short-term or higher risk, simply for the fact that that is your initial impulse that was made. And so we are still expecting continuation to the downside to occur. We do see a potential head and shoulders formation occurring with the 115, 116 handle being your neckline. Now, if we do continue to push higher, creating a deeper pullback right to the weekly resistance, that would simply create a structural retest, and you are still looking to sell that back to the 115, 116 handle. Now, failure to do either, guys, the only way that bearish momentum becomes invalid is if above that 120, 122 handle. So looking at it from a daily time frame, we can see here that we are in fact creating some sort of range after all the news that came out last week. And so looking at it, guys, that is our initial impulse that occurred. This was all treated as profit taking or relief. And last week, we saw continuation of that initial impulse. Now, one thing to factor is that we have not broken the lows just yet. And so until we break these lows and see lower lows, this is going to be warranted as a range or just a state of consolidation. And so looking at it from a smaller time frame perspective, guys, any last continuation trades are going to be warranted as the last one, simply for the fact that until these lows break, we are still expecting structure to consolidate or potentially show some bullish signs. Now, looking at it from a smaller time frame perspective, this was the impulse that was made, but notice what is occurring right here. This is forming reversal, not continuation. But even though that the signs are telling us that at some point we should expect some type of relief or pullback, we are still expecting continuation to the downside. And notice within the reversal pattern, we do see a short-term impulse. Hence, this is all warranted as relief. And so we are going to expect continuation back down to the lows and potentially even lower to the weekly support at the 114.347. Now, regardless, guys, if it reaches there at some point, we are going to expect some type of pullback back to the monthly support. Now, failure to do either may just warrant range or consolidation that may occur, but we are expecting a sharp movement one way or the other when the news comes out tomorrow. Now, one thing to factor is that if this does start to pull back to the 117 handle, this whole movement will still be treated as relief for continuation back down to those lows. That would simply just be a structural retest, and the bears would still be empowered. The only way that this bearish momentum becomes invalid is if and only if we break above the 118.54 handle, followed by a short-term continuation pattern, and then from there you could attempt to run it back to the weekly resistance and potentially even higher to break above. Failure to do either, guys, is just going to warrant consolidation, but that is not something that we think is going to happen, only because we do have a lot of pending data coming out for tomorrow. USD CAD, one of the more shocking pairs that has occurred within the last week or so, as a lot of us were bearish on this pair. So looking at it as of right now, we can see a lot of pending orders that did occur in the past near that 133, 134 handle. And so if USD CAD starts to pull off from a bullish perspective, we would not be surprised. Why? Now, looking at it from a weekly time frame perspective, guys, we can see here that we did in fact have a lot of bullish pending orders. We are going to start expecting structure to start pulling off or rejecting, but that's not to say that it couldn't make one more rally there before it does start to pull off or liquidate. Now, if this in fact is the true breakout, this does have to start to pull back, and then from there we could expect a rally back to the upside. But looking at it from the daily time frame as of right now, this is not something that anybody should be interested in trading in, because this is a very, very impulsive movement. Please factor in that this is still the main driver. And so as of right now, this is not very convincing still. You do want to see continued pushes above, but still, let's see how this formulates before we can make any clear definitive conclusions on which way USD CAD should move. But looking at it from a smaller time frame perspective, we were stating here, guys, that USD CAD from the setups last night could continue to push even to the weekly resistance one last time. But please take into consideration that after it made that strong impulse, breaking not only the weekly descending trend line, but also the monthly resistance, it didn't form continuation, but a reversal pattern. So we were either expecting structure to start to pull off or potentially to rally one more time, because that doesn't state momentum is going to shift. It's just giving us indications from a risk environment perspective. Now, looking at it from right now, even though we are in a state of reversal, this could start to rally one more time, and then from there we are going to expect that to pull off. If that does happen, this would still be treated as relief, and we are still going to expect a rally back to the upside. Now, if that doesn't happen, guys, and this starts to pull off from here, we are going to expect a rally back to the 131 handle, potentially even lower, all the way to the descending trend line. The ascending trend line. This would still be treated as relief. Still look for potential continuation back to the upside. The only way that you can state that any bullish momentum to the upside is invalid by USD CAD is if and only if we crack back down stating this is invalid. You're going to look for a strong break, some type of pullback, and then look to run it to the weekly support. Failure to do either, guys, you're going to be sitting within this, and that's ideally where you're going to work within. That's not something that you should be interested in. USD JPY on the monthly time frame, we are starting to see some type of deceleration and exhaustion occurring within the pair. Now, one thing to factor is that there are two impulses that are occurring. We have an impulse within an impulse. You see this initial rally, hence all of this bearish momentum is treated as short term. As treated as relief or a state of liquidation, and at some point we are expecting this to rally back to the upside. But looking within it, we did see this initial impulse with this short-term bearish movement until we in fact broke the lows, hence invalidating that initial bullish impulse. And now the bears are now in control. Any bullish movements to the upside are treated as short-term or higher risk, and we are still expecting another drop, potentially to the 105 handle, potentially even lower. Now, looking at it from a weekly time frame, guys, we can see in the past here that there were a lot of bullish orders here. Once we broke through, all of this is treated as relief or liquidation. Once we reach that area, that is treated from a bearish standpoint. We are going to see a lot of bearish pending orders here, not only because of the previous support, but because we do have weekly resistance and that descending trend found on the weekly time frame. Now, one thing to factor in, just like this is taught in my course, this is a beautiful example of a candlestick analysis pattern where it starts to decelerate or reject off of a long-term level. And so once this low does break, we are going to expect continuation back to the low, treating this as a 1, 2, 3 pattern, targeting the 1 back again. Now, looking at this from the daily time frame perspective, guys, we can see a potential head and shoulders coming about, just a more deeper one, right? The key critical area to break is that 108.64 handle, but within that, we do see the strong impulse. This was all treated as liquidation or profit taking, and so we are expecting continuations down to that lows around the 109.37 and potentially even lower to the 108.64 handle. Please take into consideration that the entire environment right now is range bound, right? If you do look at this from the tops down, this is the entire range that we are in. And so we are simply just looking to target the tops or the bottoms until we do in fact see lower lows or higher highs formed. So looking at it, this is the impulse. Hence, this is all treated as relief. And so now we are seeing continuations of it. So we are looking for bearish trades on USD JPY. If we do look at it from a closer look, we do see a sharp movement. This is a state of liquidation, gathering liquidity for continuation down. Once this breaks out, small term retest, so it creates a lower high. We are expecting a drop to the weekly support and potentially even lower. To the daily support and potentially even lower to the weekly support at the 108.64 handle. This is the key critical area to decide whether this is going to be treated as liquidation or a state of relief, or we should actually continue to drop all the way back to the downside. Please factor in we are range bound once again on USD JPY. GBP USD on the monthly time frame, we are seeing some type of relief or exhaustion. Please factor in pounds economics to start. You do see a sharp movement. From there, you do see a long state of liquidation or relief. And then from there, you do see another sharp movement. And then we did see another state of liquidation or relief. Within the sharp movement, you did see short-term states of liquidation. And so we did understand why pound was pushing so hard from a bearish perspective. Now, looking at it, pound did in fact break the 3-month higher low that it was holding. And so it did create newfound lower lows, warranting continuation of that initial momentum. And so looking at it from a weekly time frame perspective, guys, we are at critical areas and we are expecting pound to start to decelerate or exhaust simply for the fact that this is too much of a push from a economic perspective to not be liquidated or see any type of correction, right? It's not healthy. And so we do need to see some type of pullback. So we do see a lot of bullish pending orders there from the previous resistance or bearish pending order area that was sitting. And so once we broke out of that, this does turn into newfound support. We can see now our structure is starting to pull off. But that doesn't mean, guys, that we change our bias or direction, right? It's simply just telling us that at some point we are expecting pound to pull off or reject or liquidate. And so looking at it from a daily time frame perspective, we did start with an impulse. Then we went from a reversal pattern, which turned into a state of consolidation, and we saw a continuation of that initial momentum. Then we saw a state of relief, and then last week we saw continuation of that bearish momentum. One thing to factor in is that we are now cracking below the lows, but be careful. Very critical areas. There were 2 weekly supports sitting within 100 pips of each other, telling us that there were a lot of bullish orders sitting within here within the past. You're basically fighting a very strong army. That is going to be quite tough. Please factor in that is a reversal pattern. After the initial impulse, at some point we are expecting that rally. Back to the upside. Now, even if that does happen, this is still treated as relief or a state of liquidation, right? Until we do in fact break back above that 137 handle to state that this is now invalid. But looking at it for the next 24 to 72 hours, we can see here that pound US dollar right now didn't first give us signs after this initial impulse. After we broke these lows, did give us signs that we should start to reverse. Hence, this would be treated as relief, as a reversal pattern. But notice what happened here. Even though it was indicating to us, right, that we were not continuing, that what we should reverse, momentum didn't switch. So now structure is showing us that we are in a state of relief or liquidation. And so we should expect continuation down to the weekly support. But on the bigger sell is not going to occur until we in fact crack that weekly support to potentially rally all the way down and make a really big drop. But please factor in that if this does in fact pull back, create a structural retest, and then from there drop, and let's say it just simply starts to decelerate and exhaust right on the drop, this will all be treated as a reversal pattern after this initial impulse. And at some point, we are going to expect a rally back to this descending trend. Now, once again, if this does occur, this is all treated as relief or state of liquidation, right? Because of the entire environment. You have to factor that in. And so you would still be targeting downside unless we did in fact break above to state all of this is invalid. Failure to do either, guys, will just warrant consolidation. But as of right now, you are expecting a pullback for continuation to the downside. Looking at AUD USD. From the monthly time frame perspective, we are seeing continuation of this initial momentum right here. This was also treated as relief or a state of liquidation after that drop. And so now we are seeing lower lows. At first we weren't, right? Because when we broke out of the ascending trend, we didn't in fact break the lows on the monthly and more importantly on the weekly time frame. When that monthly pin bar or bull hammer closed, a lot of us had thought, okay, we are going to expect some type of liquidation or relief, which we did get some, but it only gave us signs of where we could potentially rally back to. Like I said, we broke out of this weekly ascending trend, but check this. Structure was, trends on a straight line shot, but a consistence of highs and lows. So in that case, structure didn't make the big impulse we expected from a bearish side, but simply just gave us indications of where we could expect this state of liquidation, which was a really nice hint for us, which was back at the previous low it broke, which coincided with the ascending trend that it broke, creating a last kiss formation as well, creating a beautiful flag for continuation of that bearish momentum. And so we are seeing that right now on the daily time frame. Check this out. Once we made that impulse, which turned into a reversal pattern, we made another sharp drop, which caused for a nice state of liquidation. Last week, we saw continuation of that following into this week. We are breaking those lows now, my friends. So now AU is a critical area once again, and we're below the weekly support here. We don't want to see false breaks, but don't be scared out, or don't be don't be fearful if this starts to pull back heavily. It's very deep movements that these pairs are making. So we are expecting states of liquidation, right? But the question is, when are they going to occur? Are they going to happen first, right? Are they going to happen now? Or are we going to see continuations and bigger and bigger drops with all the data that's coming out? And then from there, we are going to see the liquidated stages. So looking at AUD, what had happened last week into this week? We saw that drop. This was the big state of relief or a correction that we were in. And then we saw continuation once we broke these lows. Now, notice this. In the beginning of this week, structure hinted to us that we should expect some type of pullback or reversal near the weekly support, because this information is not continuation, but rather reversal. But that doesn't mean that you shift this momentum. It's just indicating to us the risk exposed environment. And so notice what happened after we broke out of the lows. We made another impulse. Hence, this is all treated as relief or liquidation. So once this breaks out, our goal is to sell that back down to the weekly support around the 72.89 handle. Now, failure to do either, guys, if we break back above the weekly support, it's going to state that this breakout is a false break. And then from there, it's going to be quite interesting to see what happens. You could see a small flag, and then from there, it could rally to the the daily ascending trend. But once again, if that occurs, this is all treated as relief for continuation back down to the lows, unless we break back above the monthly resistance and the daily descending, right? You want to state that, you know what, this is no longer in power, right? That's only 100 pips. If that happens, you're golden. Failure to do either, guys, you're just going to sit within the range, kind of within here. This could flag out and then start to pull back, right? And that is not something that you should be interested in. You could get this last trade here. That is something that does look good to take. But besides that, guys, that is all that's going to happen on AUD USD. We could see the big impulse if structure continues to occur, if there's enough selling pressure on there, right? Because we are cracking the monthly lows, but we will see. Last but not least, Nzdusd USD on the monthly time frame. Take a look at this. We do start with an initial impulse. Then from there, we did move in a state of liquidation. But once we broke this, that's the impulse that occurred. This is all the consolidation or relief that we are in. So yes, the bears are still in control, but been having some tough time breaking out. Now we are in a state of a range, and so any trades you're taking are just with lows of high as that range. Now within the range, especially on the weekly and daily, you can see that we're in a smaller range here, and so there are a lot of critical areas that can occur, because you can see a lot of pending orders after we broke out of basically that 18-month resistance. And so now the bulls take over this area, right? And so this still, though, bears are in power. You're just expecting at some point that if this rallies here, this should start to decelerate or exhaust, simply for the fact that there will be bullish pending orders sitting there. Now looking at it from a daily time frame perspective, this was the initial rally that occurred. This was the relief. And within that, we did see a short-term reversal pattern after that initial impulse occurred last week, which was easy to spot, and that was an easy trade to rally back to the ascending trend. Now, looking at it from a smaller time frame perspective, your trades are limited on this pair. Even though we're pushing as of right now, we do have news coming out tomorrow, not something we're interested in trading. Now, notice this. Once we broke out of this short-term ascending reversal, right, after that impulse, we see this sharp movement. It gives us indications that we should see some type of reversal to occur. Now, instead of forming a reversal pattern, we went into a range of consolidation, and then we made another sharp movement down to the previous lows where a lot of bullish pending orders were sitting. Looking at it as of right now, this is a tough pair to trade. Ideally, the only trades that you want to take are below the daily support and start running them back to the lows of the range of the consolidation. The big sells are below the consolidation, and you can run that all the way down to the monthly support. Potentially, news could push this to make that happen, but a failure to do so, this is going to be very short-term pushes. And by the way, New Zealand's not a pair that moves quite heavily. I mean, taking this trade down to here is going to be a mere 31 pips. And so that's not something that you guys may not be interested in. Right now, not a lot of opportunities occurring in New Zealand, but the really safest way is the buys are above here, the sells are below here, right? Because that's where higher highs and lower lows do form. And so with that, guys, these are the 6 pairs that I want to go through from a longer time frame perspective into the shorter time frame, showing you guys how we could potentially look for trades from 24 to 72-hour perspective, and look at them from an entry and exit perspective. Thank you so much for taking the time out to watch this video. I really appreciate it. And now we're going to get into the questions and answers. And so thank you guys. I really appreciate that. Shout out to you guys for all sticking through and being here. It's tough to continue to keep going on for like an hour straight without taking a break and stuff like that. So I really appreciate it, guys. And so this is now the questions and answers that occurs for the webinar. And so basically how it works is I will go through all the questions that you guys have. You guys could, and I'll answer any questions for the next 5-10 minutes. You guys can share your screens. You guys can turn your mics on. However you guys want to go about it, by all means. This is for you guys in the end of the day. And so, I just want to say thank you so much. So just give me 30 seconds, guys. Just going to take a quick sip of water, and then we'll get into everything. All right, guys, let's get into it. Let's see what the questions are. So let's start from the beginning. And then you guys can unmute your mics and stuff like that. Thank you, Julian. Let's kill Mark with the scales. Nabia went all day, every day. Just take it and be on skip to be on business. Let's go CAD drop. So what would your entry point for UJ? Hayden, what's up, big man? Do you have a mic, Hayden, or no? If you have a mic, Hayden, it'll just be easier for me to explain. If not, all good. Perfect. I'll unmute you, big man. So, Hayden, can you hear me?
Yeah, can you hear me?
What's up, big man? How you doing?
Good, man. How about you?
I'm good. So your question was entry point on UJ, right?
Yeah, I have a pretty good, let me look at my chart real quick. I have a pretty good reasoning, but I just wanted to get your, point of view on it as well.
Yeah, absolutely. Did you want to share your screen, Legend?
Let's see.
You want to go on my screen and just tell me ideally how you're looking at it?
Yeah. Let's just go on your screen because my chart, I haven't updated it yet.
No worries, Legend. So what are you looking at, sells or buys?
I'm looking at sales.
Right, okay. How you want to look at it? So check this out. What do we start with? That starts with what? The impulse, right?
Mm-hmm.
This is all what?
Hold on 1 second. Okay, say that again. I wasn't looking.
Oh, no worries. So this is the impulse, right?
Yeah.
This is all treated as?
It's relief or profit taking.
Profit taking, liquidation. Then we see continuation, right?
Mm-hmm.
All right, check this out though, real quick before we go into the impulses, whatever. By the way, shout out to Hayden. He's a student of the course. So if people are like, just want to know. But yeah, Hayden's the man. We've been working together for a while. What do we reject here? What do we false break?
Monthly resistance.
Right, break above, break below. Also look left, Legend. Low. What type of retest we getting now? Remember two types of retests? Remember two types of retests?
You might. I don't.
Momentum, structural.
Okay. Yeah.
Right. So we're testing the structure, right? And also we're seeing a lot of pending orders occur from that weekly descending trend. So check this out. We break this low here. So there's two ways that we could pull out. We can either pull back to here, right?
Mm-hmm.
And then we can start back and drop back to the lows. You agree with me on that?
Yeah, because on my chart, I'm looking at either.
Or we're gonna do this. Check this out. This is basically just two ways it's gonna happen. Either this is gonna ping back to here, right? Gonna create a lower high on the trend. This is gonna be all treated as relief. And let's say once that low breaks, etc., entry here, stops here, run it back to the lows, right? And that's going to be your first take profit. Now, if that, and this would be even a better trade for you because this would be a structural retest off of the previous low that broke, right? And that'd be Really
I
good
have a
trade. Now, if that doesn't happen, all you're looking for is notice the last low here of this ascending, which is kind of sitting right within here.
mm-hmm.
Once that breaks, etc., if that's the last high, put your stops above the previous high plus 15 to 30, run it to the lows, and then try to run it even lower.
Yeah, because right now I have my entry point set up
No trade
110.
right now.
I have mine set up at 110, 300 right now.
Say it again.
I have my entry point set up at 110, 300 right now.
For sell?
Yeah.
See, but that'd be tough. But you set a limit?
Yeah.
Yeah, that'd be tough. You know my take on limit orders, right?
Yeah.
Right. You know me. I'd say that's an if some entry.
Yeah. I see. I never.
Only because where would market momentum be? Right, and you're looking for
Sales.
right. So that's why I'm saying for anyone who's still here. That's why I don't agree with limit orders. Like unless you're gonna be not trying to beat Hayden up, like Hayden knows. In the end of the day, that unless you got the time to sit there and watch the trade, it's tough because you don't know if it's just going to wick up and drop or if this is actually still going to make a deeper correction or potentially break out of the descending trend. Do you know what I mean?
Yeah, for sure.
That's the only reason why. So that's what I'm saying. Like what I would do is just do this. Instead of setting a limit, set alert here, right? Because if we pull up to here, then this will be the new low. And then just set an alert here and be like, okay, when that breaks, then I'm going to start looking for sales. You know what I mean?
So what pair are you most focused on right now?
Nothing.
Nothing.
Only because and look, a lot of people have been hitting me up in the group chat and they're like, well, you sent 2 signals out of 3 weeks ago, which was great. Then last week, nothing came out. And this week, you haven't sent anything so far. And I'm like, it's because last week we had a lot of news. This week, we got a lot of news. You know what I mean? And so the way I look at it is that I like to survive and have my trading account by the end of the year. And I like my life as a full-time trader. And so I'm going to avoid all the, risk exposed environments. You know what I mean?
Yeah, for sure.
Like the way I look at it, Hayden, is let the storm just, get a big bag of popcorn and let the storm just unravel tomorrow.
That is true. I mean, I've already blown my weekly goal out the water. I caught over 100 pips last night.
Yeah. Yeah, then what's the, you know what I mean? And if you,
I'm not in any rush whatsoever.
Watch, I'm asking you a question right now. There's going to be a bunch of opportunities next week?
Oh, yeah, for sure.
Then that's your answer, legend. You know what I mean?
I mean, that's one of my things. I've been waiting to, be more patient and whatnot. And, I mean, it's definitely paying off. So.
Yeah, I mean, that's how I look at it in the end of the day. The reason why I've been able to survive and be as consistent as I am and be able to deal with, because I'm going to tell you right now, guys, like trading doesn't get tough as you get better at it. It just, the only thing that becomes more difficult is managing, your capital, right? Simply for the fact that you're dealing with a lot more money, lots get bigger, so hence emotions will start to arise and things like that. And so you have to look at it like this. If you want to be a big baller in this game, you basically got to be able to deal, you got to be able to fluctuate. You got to be able to deal with hundreds of millions of dollars of fluctuations of cash for like 10, 20, 30 years. You know what I mean? And so if that's the case, you got to think, okay, I got to create a plan where I'm going to be sane by the time I'm 30, and in 30 years so that I don't burn out. I've seen so many traders burn out. Like you have no idea. There are so many stories of sick successful traders that literally like 50 mil, 100 mil, etc. net worth that burn out and become taxi drivers. I kid you not.
How in the world do you let 50 to 60 mil just go away like that?
I'm telling I'm telling you right now at that level, Hayden, you could drop 50 mil in a day. Just go buy 2 G5s, done. It's gone. Gone.
That's insane, though. I mean, that's just not.
But think about it. Like, okay, here's a good example. You got a 10 mil account, right?
Mm-hmm.
You run in 100 lots, right?
Mm-hmm.
You said you made 100 pips this week, right?
Yeah.
Great. You just made 100 grand. Nice, right?
Mm-hmm.
All right, big man. Now Hayden's like, all right, whatever. I know, and Hayden, and look, guys, Hayden, you know, I've been working with Hayden for a while. Hayden's been hot right now. He's been doing really well. Shout out to you, by the way, legend. And so you're like, you know what? I've been so hot. I'm gonna make more money next week, right? Hayden goes out. Hayden's like, you know what? I'm gonna buy myself, like, I don't know, 60K paddock. That's fine. Or as people say, the patique, whatever. So go buy yourself 60K. You know, you go buy yourself, you know, big present. And let's say, you know, but the issue is what happens with these guys at the end of the day is not because they're not good enough, but because their lifestyle becomes so tough to manage that, you know, and the one thing that becomes is that you won't have the same performance every week. It's just not going to happen.
Oh, well, I mean, I actually did that a couple weeks back because I
What?
was, you know, back when I was first starting out, I was making $2 or $3 here and there every day. And now for a week, I'd be lucky to make like $50 a week. And now I'm making $1,000, $500-$600 a day when I do
Right.
trade, because I don't trade every day.
Right.
And a couple weeks ago, I went through a bad spell. I mean, I was breaking all my rules. I wasn't in a right state, like emotionally or mentally. I was just stressed out from other things as well. And you know, I was like, well, I've got this X amount of dollars. I can go out and buy whatever I want because I know I'm gonna make it back. You know what I did next week? Lost over $1,000 because if you go ahead and buy something, you know, you're kind of already saying, well, I'm gonna make this money. Well, nothing's guaranteed, especially in Forex.
Yeah, absolutely. And like, you know, and shout out to, sorry, Hayden, go ahead.
You don't need to go out and spend $10,000 with the mindset of, well, I'm gonna make it back next week, because you could lose $10,000 and then you put yourself in a hole and that much more stress on you, you know?
Yeah, like, you know, in the end of the day, like, Hayden, you've seen my going full-time video, right, for the course?
Yeah, I have.
Yeah, and you see how I construct my lifestyle and how I break down, you know, when I buy my stuff, when I don't buy my stuff, and so forth.
Mm-hmm.
When do I buy my big gifts? Every what?
Was it every quarter?
That's right. You know what I mean? My job for 3 months is just to take care of expenses. And then, you know what? If I kicked ass, yeah, I'm going to go treat myself. You know what I mean?
Yeah, just to survive.
That's what I'm saying. Like, my goal is like, you know what? I got a girlfriend I got to take care of. I got a family I got to take care of. I got myself to take care of. That's my job. And then, you know, I got my students and my guys that work with me. I got them to take care of. That's my job, right?
Mm-hmm.
And then, you know what? When the quarter's over, yeah, if I did well, great. You know what? I'm going to treat myself and I'm going to treat, you know, the people that, you know, that are close to me as well. You know what I mean?
Yeah, I mean, you got to. I mean, yeah, I'm not saying don't go out and, you know, treat yourself or treat your loved ones or whatnot, but don't go out and drop a huge amount of cash thinking that you're going to make it back, because more than likely you're not going to make it back, because when you go in with that mindset that, all right, I'm doing it, I'm going to make it back, no doubt, no, you're not going to. You're going to lose.
Yeah. Like a lot of people ask me all the time. They're like, surely, Albert, you could be making way more money if you weren't doing that FX trader. And I'm like, no. And they're like, why? And I'm like, because in the end of the day, my whole account is created off of compounded systems. So, you know, the let's say the unreal lot sizes or the 666 money that, you know, you see here and there seldomly, whatever it is, you know, I'll get there and I'll be doing it consistently and it'll just grow every year. And then that's what I just love. Is once you really come to a good understanding of compounding, it's just like, you know what, don't rush your time. As the rappers say, right? Don't rush you know, your time will come. And it's true, you know what I mean? Like it's honestly true. Like it's just quite insane. Take it from me, guys. Like, your goal is not to be a millionaire your first year or two within FX. It's just not. If you do it, shout out to you. If you do it, shout out to you. You know what I mean? But don't go in there with your expectation. And then to all the social media accounts out there that give that false expectation, you know, that's just not right in the end of the day. You know, and if you don't believe me, why don't you go ask a prop trading firm, you know, what your qualifications need to be to manage assets, right? And so, you know, and ask them, you know, what they receive off of that, right? And so that tells you, you know, the levels that you need to be at in the end of the day. And so, you know, shout out to you, Hayden, for being really transparent and honest, right? You
Mm-hmm.
know, I appreciate that. One of the things I tell all the students, all the guys, the course, stuff like that, is that, the one thing we're trying to do is really change the culture here, right? And really show people it's just not about how much money you make, but how good you could be at your craft, how disciplined you can be, how consistent you can be. That's what we wear on our chest and represent. And so, but did that answer your question, Hayden, in reference to UJ?
Yeah, for sure. I appreciate it, man.
Yeah, always. I mean, last thing I'll say about this, guys, and then I'll answer the question on this. I'm not saying that you can't make $1 million in a year trading Forex. It's possible. You could take $1,000, double it, and I think in 10 months you hit $1 million, right? Like every month, if you doubled it, you'd hit $1 million. But your goal in the end of the day is you're trying to master a skill set that you can use to generate residual income for the rest of your life. That's the goal. And whether it takes 6 months or it takes 5 years, who cares?
Hey,
You know what I mean?
can I add one more thing?
Yeah, legend.
Okay. Well, another thing that's really helped me out. Well, there's two things actually. Okay, one thing, you can be going along well, and obviously, a lot of people don't use risk management and whatnot, and I've been guilty of that. But you can win big amounts of money, and then I think in a sense, on a small account, you can win big, but I think in a sense that gives you a false hope, and then because if you keep doing that, you're gonna get burned, and that's what I did one time. I've actually done it a few times, but you will get humbled really fast, and the market will put you in your place because I know a few weeks back it really put me in my place, and now I've fully recovered from my losses because I've followed my rules. I haven't been taking 10, 12 trades a week. I've only been taking 2 or 3. And, it goes back to what you were saying about compounding. $100 here, $200 there, $300 there. It adds up fast.
Mm-hmm.
Faster than what you would think.
That's why, like, people ask me all the time in the end, they're like, oh, how much do I need to go full time? And I'm like, well, I really have no clue how much it's going to cost you to live on a monthly basis. Plus,
yeah, I mean, it's just all based off your lifestyle.
Right, but it's like, someone was like, is 10,000 enough? And I'm like, well, it depends how much pips you can get. Like, if you're a guy or a girl that can clean, 200 pips in a week, think about it. Like, if you had a $10,000 account, let's say you want to risk 5% or less, whatever you want to do, but let's just put 5% for easy numbers. That comes out to $500. You run like a standard lot, your stop loss 50 pips, you're pulling 2K a trade. Do that 4 times a week. That's $8,000, right? Compound that, do that the next month. You might make 10 grand, then 12 grand. Mm-hmm. Next thing you know, in 3 months, you just made over $20,000. You know what I mean?
Oh yeah.
And that's basically a 300%. No, it's be like 200% return. Yeah. No, 300. Yeah, 300. Yeah, 300. I don't know. I can't think anymore. But yeah, so
it's a lot.
But yeah, so in the end of the day, as the rappers would say, guys, don't rush. Your time will come. But Hayden, does that answer for you, Jay?
It does. Yeah. Appreciate it, man.
Awesome, legend. Awesome. Shabi, how we doing, big man? Who else? What other questions? Anywhere you see where his score is on daily, monthly, bro, could you do EJ, please? Is Nabil here? Yeah, Nabil. We'll run through EJ real quick. Let's get through EJ. Yeah, okay. Nabil, do you have mic, legend? Or no? I don't know if Nabil's got a mic, but if Nabil has a mic, basically EJ, I don't have any analysis on it, but we'll do a quick. Yeah, you can sell that. You can sell that. No, you don't want to sell that yet. No, sell that. All right, this is your key area. That's all I care about. Cool, that's it. Okay. Looking at it, 2 ways, legend. So we started with an impulse. I mean, the daily gave us clear, but I'll do the 4 hour. Then we were in this long state of relief. Then we continued, dropped again, dropped very hard. Then made a very deep correction, creating a lower high on that trend. So now let's take a closer look. This is the key weekly area that's basically dictating the buyers and the sellers. We can see a lot of bullish pending orders occurred there. False break 1 here, and a lot of pending orders sitting there as well. So looking at it, Two ways. Let's just do basic stuff real quick. So you could either sell that back down to the lows if that rejects, right? This is your trend though, as of right now. And so, no, maybe that's not your trend. You could, let's work with that. So if that starts to break out, you can start running it back to the lows, but this is your key area. Be careful of that. So take profit once there. Only way this becomes a buy is if and only if we break above that. Look for the continuation. Look to rally that back up. If we don't do either, you're just going to consolidate. But yeah, so you kind of have two zones here. That's all you really care about. And then this is your key critical area. Does that make sense, Sonabil? It's like quick markup, if that works, Legend. Okay, cool. I got a question with you. Jose. Jose's got a question. What's up, Jose?
Hey, what's going on? Can you hear me?
Yeah, I can hear you. How you doing?
I'm doing good. Here, let me share my screen with you.
Yeah, go ahead. How you been, Jose? How's everything?
Oh, doing good, man. How you been?
I'm alive. That's what matters, right?
That's right. That's what... All right. All right. Can you see my screen?
Yes, sir.
All right. So back to dollar CAD. I'm showing you the weekly chart, and I'm color coding my weekly and daily levels. So you see I got red for weekly levels and I got blue for daily levels, and then I just change the color as I go to a shorter time frame.
Yeah.
So based on my chart that I'm showing you, I know you tell us in your videos, about when we're plotting proper support and resistance levels. I'm going by in my opinion, the most recent price data, right? So that's why you see me plotting those numbers, those levels there, because of just recent price.
Are you asking me though if these are correct or not?
Yeah.
I would put your weekly resistance is going to be off of this wick here, the first one, because this was support. That broke. This creates the newfound resistance. Then your next weekly resistance, this was support that broke. So this would be your next weekly resistance there. So this one was correct. Just the top one, you just moved more. Then weekly support, Legend. You could tag this as one weekly support, just moving out off of that wick there. Then the next weekly support would be, that was resistance, that broke. That's your next weekly support sitting there. Then this broke, so if you want, you can mark that as weekly support as well. So you got weekly resistance here, weekly resistance here, weekly support here, weekly support here, and this would be weekly support here. Does that make sense?
Yeah. Okay. You're just adding a lot more data, right? I mean, what I'm doing is
I'm just marking the previous areas that acted as dynamic support or resistance. Like if you look here, Legend, you can see I use black. Like that was support, right?
Mm-hmm.
That was support, broke, becomes resistance. That was support, broke, becomes resistance. This was resistance, breaks, becomes support. That was resistance, this breaks, becomes support. You know what I mean?
Yeah.
So that's what I'm looking at. That's all.
All right. Thanks. My other question to you.
Yeah.
So with the recent news, with the rate hike, typically news like that causes like long-term trends, right?
Not necessarily. You mean what, when they raised?
Yeah, when they raise the rates, right?
No, not necessarily because it was priced in. What matters more is about when's the next movement. The question is, okay, they raised. How many more are we getting? What was expected? So if they said 4 is expected, now they're saying 3 is expected, then you know what? That should depreciate the dollar. You know what I mean?
Okay, but don't you ask yourself these kind of questions? Like, look at dollar CAD on the weekly. What caused this humongous move here? What caused this humongous move? Something happened with the dollar, right? Must have been some strong data, or is it pure just technical?
Well, I mean, did you look at oil?
Well, I was trying to figure it out. Just trying to find out what caused this huge move.
Well, yeah, take a look at oil. If you take a look at oil, right? which is a very strong correlation to it. We can also see that we're seeing a lot of depreciation within oil.
Okay.
Which could be, another reason on why CAD's been having the tough time that it is.
Okay.
You know what I mean?
Yeah.
But in reference to, I asked myself this, to be quite honest, I don't really care as much about the fundamental data. Just care about avoiding it, making sure I'm not in it. You know what I mean?
But don't you gotta have a little bit of both?
Yeah, I mean, I do have an understanding of it because I read about it. But I mean, this right here, this is just in my opinion, I think I really think this is gonna be a false break, but we'll see. But I think right now this is just a technical correction. I mean, still you have to remember, still CAD, the Canadian Bank of Canada still wants their currency, much stronger than the dollar. So we'll see, though. We'll see.
All right, sounds good, man. Thanks.
No worries. No worries. Can I share my thoughts on GA? Yeah, I can go over GA real quick. I don't have any analysis on GA because I don't trade the dollar pairs, but I mean the cross pairs, but I can give a quick rundown on it. So even though we were in a state of relief, right, this is creating short-term higher highs, but we were seeing false breaks above that, potential structural retest. So okay, basically you just want to look at it like that. If you see a break above that, that's the big buy. But all bullish movements right now to the upside, short-term, higher risk. Take a look at pound and AUD across the board, right? And so, critical. I mean, yeah, this is all relief, right? This whole structure here, that's all relief. State of liquidation, short-term breakout there, but we didn't break the lows, so could rally up. Pull it to the daily. Yeah, it's two ways. You're going to break out and go down here. You're going to break out and go there. It's too tough to say right now because you are in a very critical area. So basically that's what's going to happen. Break that, rally up, break below, rally down. Two ways. If not, it's just going to consolidate. But let me see if there's any last questions. And so, guys, if I'm going to do about one more minute and then I'm going to have to run off, unfortunately. But if you guys have any last minute questions pertaining to, market structure, questions in general, by all means, go ahead and ask them right now. But I want to thank all of you guys again for coming out. Really appreciate it. Apologies, guys, if I sounded a bit down today or a bit beat. I am getting a bit sick, so I am feeling somewhat under the weather. So apologies about that, but want to make sure that we get this webinar out for you guys, and so we can definitely make sure that we get the outlook for you guys. So apologies if I had a lack of energy this week. Really sorry about that. But promise you guys next week, firing as always. And so be careful, guys. Be very careful moving forward. Lots of data to be coming out tomorrow. Thank you again so much for coming out and watching. I really appreciate it. Just so you guys know, these will be uploaded on YouTube. I'll be putting the long term as well as the full length as well as the highlights on YouTube. And so you can find that at that FX Trader. If you guys want, you guys can go and subscribe. I'd greatly appreciate that. And so once again, guys, thank you so much for coming out. I really appreciate it. If you guys need anything, the best place to reach me is on Telegram or Instagram, anywhere. At that FX Trader is the place to reach me. But thank you so much again for all of you guys for coming out. And with that, guys, trade safe, be smart. And then next week, guys, I'll see you guys again Tuesday at 5, as always. My Instagram is at that FX Trader. I'll type it in. And so you guys can contact me for about anything. More than happy to talk to you guys. And so have a wonderful rest of the week, guys. Thank you so much again for coming on. And I look forward to seeing you guys all the following week. Speak to you guys later.